Hello everyone, welcome to the newsletter for January 24th. Today I want to run through a really interesting site actually that I quite enjoy. It's called whalemap.io. And what Whalemap has done, so Whalemap is a anonymous, similar to me on Twitter, analyst who, as the name would suggest, looks at what BTC whales are doing. And there is two classes of whales really that we have in this market. One is obviously the early adopters, the people who've been here for a long time, have a huge amount of coins on hand, and essentially they are going to at some point be liquidating into strength because that is where they need that retail strength. They need people coming in wanting to buy, and they need someone to offload their large size to. And this is the nature of the Bitcoin market. Is we've had two cycles really. We've had the first 12 years, which has essentially been lots of coins on the relative cheap. So people could buy with a very small sum of money on a relative basis, a large volume of actual coins. And we're now moving into what I think is the second real phase, which is essentially people coming in with huge dollar size, but there's not as many coins on the market. So there's going to be a transfer of wealth that occurs during this whole process. More macro type investors start coming in looking to buy positions. And essentially, it's the large whales who've been here since $100, $200, $12, 6 cents. They're the people who are going to be offloading to these new whales. So there's going to be a transition of these flows. And as you can imagine, in a lot of this market, it's the large size, both in terms of dollar terms, but also in terms of coin size, that are going to be actually moving where things go, right? So this is a trend that we can expect to continue on. And what Whalemap has done is he's put together a handful of metrics that are really quite useful. And the more time I spend looking at them, I really wanted to actually just do a whole session to bring this kind of to your attention, because I'm finding this to be a really useful tool. So let's start big picture. And as we go through, we'll zoom down in and get into some of the more nitty gritty details and understand a little bit more about what's going on with this correction. So let's zoom out on this guy here and look through. So what we're talking about here is whales. These are transactions or people value that's moving to wallets that's essentially greater than 10,000 coins. So we're talking about huge size, right? These are very, very large investors. So we're looking at large wallet inflows. This is essentially when a particular address is receiving a very, very significant sum of coins at a single point in time. And then essentially holding those for the long term. Now, you can obviously see a very, very interesting dichotomy in this chart. So if we start at this point here, right, everything before that, there's a few instances of large wallets, right, moving around. But what we're seeing through here, particularly through 2018, 2019, to me, this is telling me two things. One is that you're going to have a whole lot more exchanges that are starting to come onto the scene, right? So back here in this early era, there really isn't the same kind of exchange infrastructure. It doesn't have anywhere near the same kind of traction. The amount of capital inflows is relatively small. The infrastructure is not there. What we see as we come through 2017, there's a growing number of exchanges who will have cold storage wallets and things like that, and multiple cold storage wallets that are, in the multiple tens of thousands of coins. But we're also going to see individuals who are now starting to understand this phenomenon, and more people coming in with more size, right? Back here, you wouldn't be investing $100,000 because you'd be just completely blowing out the market. But people can start investing $100,000 up here, and over here we can start investing millions of dollars, and what we're seeing at the moment is billions of dollars. So this gives you a bit of a scale of things. And for context, Michael Saylor level investment is essentially what we're looking at in terms of this whale size, right? 10,000 coins is a huge sum of money. So we're talking about very, very large size, very, very large investments coming in the hundreds of millions of dollars range. But you can really see that these whale bubbles, obviously the size of them is the size of wallets that are actually receiving these coins. And you can see that, we had a few in the very early years where it was essentially worth less. And then you can see a few of them started popping up. Some of these would have been exchanges starting to take on a bit more active role. Certainly through 2018, I would suspect that. You can see at the bottom capitulation. I mean, this is something that's very, very important, right? So look at the top. We had obviously distribution going on at the top. We had huge accumulation going on here. And this would also be exchanges that are starting to receive massive inflows at that point in time. You saw that during this rally, if you recall, many of us were talking about, wow, that was so explosive. So this was the wake-up call for people to really start accumulating. Once they realized that this rally was selling off, there's also the plus token Ponzi that's hidden inside here as well. But you're going to have more and more whales starting to accumulate these coins through here. You saw that there was a huge buying opportunity back down here in March. And this trend is just unbelievable. I mean, the amount of coins that are being accumulated through this zone, as you can see, it's essentially the hottest zone in the entire market. So what this is essentially showing, and we've seen withdrawals out of exchanges, so there's a fairly good basis to say that this is actually large holders getting in size and accumulating through this zone. So very, very impressive. I really like this site. I think that Whale Map has done an excellent job of actually providing useful information. But you can just see the strength of this rally. So there was obviously the rally off the bottom. This was a key accumulation phase. This is more or less where Michael Saylor and MicroStrategy was stepping in, and then all through this zone here. You can see that as we come up to all-time high, there was a lot of accumulation going on at that point in time. And if we look at the 1,000 to 10,000, very, very similar. I mean, look at this capitulation pickup. This capitulation pickup, this is probably distribution going on from the plus token system. But look at how full all these high scale wallets are. And even up here, there's a lot of coins moving, being accumulated up at these levels. So this is significant. This is showing us that there is genuine strength. There is genuine desire to be accumulating coins up at these points. And you have to remember that all of these transactions up here are two-sided. So somebody is selling into the strength, but somebody else is accumulating. So in either way, what we're seeing is a growth in wallets that have large volume inside them. Yep. So more or less, it's a transition of one person's wealth, which is probably bought much, much cheaper. And as you can see, there is obviously large buyers who are buying much, much cheaper, now liquidating into strength, and someone else is now taking those coins off the market. So there is, in my personal opinion, a transfer of wealth from the old holders, the old hands, the very, very old cypherpunk level hands, into some of the more institutional realm, right? So they're realizing some of those profits and probably going to enjoy themselves the rest of their life. So good for them. This one is really interesting. So this is the moving profit and loss. So obviously we've got our price chart here, but then what we have, this is looking at essentially the difference between when coins last moved and when they've looking at the two deltas, right? When were they purchased essentially, and when were they being spent? And you look at, obviously, it's like realized price on a per transaction basis. Now there's two different tabs here. Let's start with hodlers, because I think that's more interesting. So for hodlers, let's just focus on this rally as we came out of the March 12 sell-off. Essentially, what this is showing is an increasing volume of hodlers, people who have held coins for a significant period of time, essentially selling into strength and realizing profits. And as you would expect, the people who are long-term holders, right, the longer you stay in this market, the more realized your profit actual potential becomes. So these are people who understand the game and they are selling into strength, and simultaneously, hang on, let's get our losses back up here. I mean, I just love this chart. This is so good. So because it's in log, it literally drops to zero. But what you're basically seeing here is the coins that are moving from old hand wallets are getting profits, and the losses are, as you would expect, going down proportionally, right? To the point where, I mean, I love this cratering off. This is just great. So this is basically saying that hodlers who held for a long time, you couldn't have lost, right? I mean, at all-time high, you literally can't lose. And, they're selling into that strength. You can see that there's a gradient that's actually above all of these bear market peaks. Do we have something that's equivalent? Let's zoom this guy out. It's not the easiest site to necessarily navigate in terms of the axes. But, okay. So we're talking about more or less the highest profit potential. I mean, up here at the peak, we were talking about $1 billion, right? So $1 billion of profit being realized on that particular day. Which is not insignificant, but you can see we have very similar peaks running through all of these. As you would expect, as your profit potential goes down, interestingly, the losses of the hodlers essentially trade sideways, right? So more or less, this is saying that they're not selling, right? Yeah, the ones that are selling are getting less profit, but they're on aggregate, they're really not losing that much money, right? Which is fairly impressive. So it's kind of a more balanced scenario. And actually, this shows the relative intelligence of the market, right? So Hodlers are essentially realizing profits, and they're not really realizing losses. So these are people who stick in the market. So now let's go to the all function, right? This is all plebs involved. Get our scales check. And interestingly, what we're seeing with basically when you factor in everybody in the mix, you can see that it actually follows price, which kind of makes sense because the more average you are, right, as a trader, the more you're literally going to gain and lose with the market. If you're in a bull market, you're probably going to be making profits. If you're in a bear market, you're going to be losing money. And you can actually see that a lot of these, you actually get an increase during all these big dips, right? During all these dips along the way, you actually get a spike in losses, right? These are people who are losing, right? And you have to remember that all of the hodlers are inbuilt in here as well, so there's a natural bias. But unlike what we saw with the hodlers, right, during this rally where profits are going up, losses are going down, which means that they essentially are selling at all-time high and you couldn't have lost. We're getting in the exact same system, even though the price is rallying higher, we're getting more and more people losing money, right? People are losing money in this trend. It's amazing. So, these are people who are essentially buying up at these points here and then selling during the minor dips and getting shaken out, right? You can see these losses are spiking essentially wherever we have these dips. And then during this particular dip, look at the losses just start, really screaming higher. So it shows the dichotomy between what hodlers are doing and what short-term traders and people who are in the market for short-term retail level traders are doing. So, it really shows a difference in trend. You almost get as many losers as you get winners when you factor in the aggregate market. But then when you look at the hodler field, which, I would largely expect most of us sit in, we're essentially winning as long as you're holding in the market for long periods of time. And when you combine that with these large inflows, you can see that, there's a large amount of volume that's been accumulated through this zone here and is then being liquidated into the hands of what I would suggest are institutions as we go up here. So I think that was pretty interesting. And I like the way he's actually set this up. It's a fairly interesting site. I've not seen anything quite like this yet. Trend is your friend. So this is looking at large transaction volume. What exactly is his definition? Does he have a definition of what they are? He's got different. Of course, he's got different sizes. So this is dollar value, right? Dollar value moving around. So let's start on the low end. This is everyone and hodlers. Let's just stick with everyone because I think that's probably the most relevant. You can see that since the March 12th sell-off, it's basically been a linear uptrend in terms of people who are actually investing in this market, right? We're getting, this is $5 to $7 million transactions. And remember that every transaction is going to have someone who's buying, someone who's selling, so that there's both sides of the equation. And we know that there's people who bought much cheaper. So the fact that you're getting more volume is a good sign because it means that someone is on the buying end of that transaction. And generally, this is going to be institutions when we're talking about these $5 to $7 million moves. And you can see that there is a definite trend to the upside. If we start ratcheting up the actual size, again, you're seeing from pretty much all-time high. From all-time high, you're getting a real growth in large volume. I'm sure that 10 to 20 is going to be very similar. You're getting much growth. And, this is showing that there is genuine demand to actually be accumulating up at this level, right? It's also the old hand selling, but, the $20 million mark is really where we're talking about significant plays. And you can see that we've still got this nice little uptrend. And you can see that through the course of history, it is significant, right? It stands out amidst all the other ones. The last time we saw the real FOMO was at both of these peaks. Some of this would have been the plus token Ponzi through 2019, but you can see that the last time we really saw such volume was essentially the 2017 peak, right? So we're not quite there yet, which suggests that we probably have some room left to go, which I think we're all probably aware of. But if we look at our hodlers, let's look at the 20 million mark. Again, we're talking about these are wallets that are basically taking in the coins and not letting them go. And you're seeing that we're getting that growth. So these are probably old hands that are selling into that strength. And if you just look at the scale of volume here, where's our volume tab on the left-hand side? That will be 40 million, I think. Or 40, no, this will be a count transactions. We're talking about 40 transactions on the old hands that are essentially selling into strength. So these are to be classified as hodlers. They've been holding their coins for some time. So we're talking about, 40, let's say 15, somewhere around that realm in terms of transaction count, looking to this left axis. If we now look at the all transactions, similar scale, 20 million, you can see that we're talking about, what are we? Hang on. 300. So far more transactions coming in to move coins that are not classified as hodlers, which to me is newer money, right? So, we are talking about a greater demand to be accumulating at size than we are a demand to be selling. So, that's really what this is telling me, is that dichotomy. And I really like this switch between the all and the hodlers. I think it gives you a lot of insight depending on, once you understand the mechanics of people buying cheaper, much lower, you combine it with this large wallet inflows, I think you can get a lot out of it. So the last one we'll look at on Whale Map is the SOPA, which is spent output profit ratio. So very similar to what we saw in which one? In this one here, moving profit and loss. This is more of a over time type metric. With the spent, this is looking at individual transactions. What did they buy it for? What did they sell it for? And then looking at that on net across the whole market. So what we've seen in previous bull markets, essentially when it's in the green, it's saying that the transactions that were actually spent were in a profit. And obviously the more profit that it was in, the higher these peaks are going to be. So what we've seen in previous bull markets is you essentially get a, once it gets above the red zone, right? This is now all in profit. You get a few little dips below, which is, obvious and lines up with all these individual dips themselves. But by and large, you're getting this uptrend peaking towards your final blow off top, and then you transition into the red zone, you get a rally back up. So, it's kind of the expected pattern that we see play out fairly often. But importantly, through this bull market, at the bottom of all these dips, the spent out, the SOPA, just keep it simple, has almost always reset back to the zero line. So what this is essentially saying is that it's measuring all the transactions on that particular day. Were they transacted whilst in profit? And when it dips back into the zero or the red zone, it's essentially saying that there's no transactions that are currently moving that are realizing a profit. So more or less, the selling has stopped, right? The old hands have stopped selling into the strength. They're now sitting on their coins, right? They're sitting on their hands, letting it recharge for another run. We're then going to get some kind of price appreciation at some point, and that's going to put more coins back into profit, and then they're going to start moving again. So you can think about this as a momentum play. When are people actually going, all right, it's time for me to liquidate? Well, the smart money is normally selling into the strength of a rally. So you get an increase in the SOPA. And then as we get the initial correction, people start liquidating. You get a reset where people stop selling. People have essentially gone, you know what? That's the correction done for me. I'm going to sit tight. And they then wait for the following rally to sell into strength. As you can expect, once you've got this blow off top, people start selling even though it's still correcting, right? So that suggests that people have realized that maybe a top is in and we're starting to seriously liquidate. So you can actually see, you can paint the bear market just based on the volume of red, and you can paint the bull market based on the volume of green, right? And as with many things, once it goes red, it doesn't really stick its head back up above the green zone until it does, right? So you get these trend-based rallies. So what you can see in this particular map is we've essentially got our bear market capitulation point. We had a major sell-off, like these are lots of coins selling down at a loss. The March 12th, we've then bounced back up above, and we're now maintaining this same pattern of sticking above the line. You can see that the spent output has essentially reset itself. And to me, it would be nice to get a bit of an undercut, right? As Doc would say, you want to get a little bit of an undercut of the previous levels. And we can look shortly at what kind of price signal that could be, where we can kind of expect that type of full reset. But simultaneously, when we compare that back to our count of transactions at size, plus the fact that we're clearly getting wallets that are growing, even down here at these levels, right? When you combine all of that information, it would not surprise me if we essentially consolidate and then continue our rally higher. So, we may have a bit of time factor in all of this. We may get a bit of a dip and an undercut. But overall, I would certainly be thinking that based on what I'm seeing in terms of whale volume, we're starting to look at a zone that, it does look pretty attractive in a long-term risk to reward scenario. We've had all the FUD factory come out, so that's normally a good sign of a bit of chaos and shaking out weak hands and the like. So overall, this is a pretty promising layout right here. So we'll see how it plays out, but all good so far. And on-chain volumes, this is the last one we'll look at. So you can see, again, we've got a fairly marked, let's zoom out so we get a bit of history. Now, the important thing to remember in all of this is we're talking about on-chain volumes in terms of dollars. And obviously, when you've got coins back here that are much cheaper, you need more coins to move for the same dollar value. And up here, you need less coins to move with a higher price to get the same on-chain price. And you can generally see that we're sitting somewhere around pretty much the entirety of the bull, right? So we're up in that range. Similar back here, right, in this early bull market phase. A very, very distinct difference in character from what we saw all the way up to the top here, right? So there's a bit of a bull market phase here. You can see that on-chain volumes essentially follow market demand, right? More demand, you can have more things flowing around on-chain. So overall, I think that the market signals are fairly strong. The whales are clearly accumulating. There's clearly this uptrend in volume, and if we're looking at these large transaction sizes, this is really what is driving this market. This is a linear uptrend of significant volume that really we haven't seen in almost any other segment of the market, right? So you can see here that in terms of dollar value, this is capital inflow, right? We got a retail mania, we had Plus token, and now we're getting legitimate, sustained, increasing institutional adoption. So this is all pretty positive stuff in my view. So have a look at Whale Map. So that's whalemap.io. I'm personally quite a fan of this site. I think he's done a really, really good job. I think this is the kind of alpha that people don't fully understand and don't appreciate. Whalemap does a really good job. You follow his Twitter account as well. He's pretty switched on in presenting different key levels and things, but this is the level of granularity that you really just don't get from looking at aggregate information, right? This is looking at an individual transaction basis, individual address basis, actually scanning through the blockchain itself. So this is super cool information, and I don't know how long it will last in the free system. I can see he's got more information coming out as a paid system. But overall, worth checking out and putting some attention on. So just to jump over to a tweet from the guys over at Glassnode, this was a really, really cool metric that they put out. It's essentially looking at the 30-day change in the realized cap. So if we think about the realized cap, or the change in realized cap is the amount of capital inflow, because every transaction, the underlying assumption is that it's a buy and a sell. Someone is liquidating old coins at new prices. And in general, when you get large moves in the realized price, realized cap, it's a pretty good assumption, because normally if, the longer that a coin remains stagnant or stationary, the more likely it is to want to move again. The less likely it is. So when a coin has moved recently, it's more likely to want to move again. When you're getting old coins moving, it's generally a sign that someone is selling into strength. And what they're looking at here is essentially on the same axis, right? So they're looking at the market cap and the 30-day change, and this is entity adjusted, which is really cool. So I actually had a phone call with the Glassnode team the other day. It's potential that I might end up actually doing some work with them, which will be pretty exciting, and get a bit of access to their data and start playing around with things like that. But what they do with entity adjustment is they layer in not just taking an aggregate view on the realized cap. They actually look at individual wallets and they cluster together. So if Coinbase is just shuffling their wallet from A to B, they're not going to count that, right? They're not going to consider that as a thing, because it's basically a daily practice. It's not really economically important information. So when they say entity adjusted, they've actually done all the chain forensics, or to the best of their ability, to piece out what is a relevant transaction and what can we safely discount as just a non-economically important variable. So because these are on the same axis, and that's what this white line is showing, the amount of movement that's occurred in this particular rally up, right? The amount of value that's been transferred is actually equal to the entire market cap, right? Over 30 days is equal to the entire market cap as it was back in 2017, right? Just before the final leg up, and equal to the bear market rally. So this is only justifying what we've just seen with the amount of whale volume that's moving around. So overall, this is telling me that there is a non-trivial amount of value that is being accumulated in the asset. Look at the signals on chain, irrespective of this dip. I think we all saw this dip coming. When you go parabolic vertical, there's a pretty good chance you're going to get a pullback. And what we're seeing right here is significant inflows that are mappable on chain. And I would say in unique in Bitcoin's history. We've just never seen this much capital inflow at such a scale, at such volume, and at such size as we've seen basically since all-time high, right? Since 20,000. So I think what this is doing is really, really validating the thesis. It's giving us a whole lot of character about what the large size is doing, both in dollar value, but also that we're getting basically limited liquidations of old hand coins into the strength of significant dollar value. So, ultimately what this is telling me is that support is going to be nearby. So let's lastly look at what kind of support levels, might be viable. And really, I think that there's probably two metrics that, there's three metrics that we'll look at. One is the Mayer multiple, one is the MVRV price, and the other one I want to look at is the gradient oscillator of the 14 days. So let's actually start with our gradient oscillator. So I've been saying for a while that I would love to see this massive reset to the downside, right? Where we're getting over a 14-day period, we're getting some kind of significant correction to the downside to just try and reset and get this oscillatory behavior, right? You need a bit of downside, you need to go down to go up. And we finally got that, and we got that with gusto, right? So you can see that even though we're still up here at, whatever this is, 33,000 or whatever we're currently trading at, 32,000, we're getting this massive pullback in the reset of the momentum. So, let's get a bit of shake and bake down here. What I would like to see is, and you've seen this before, you can trade this essentially as a, there's the little head and shoulders, that was the reversal. Likewise, 1, 2, 3, there's your head and shoulders. I would be looking for, because this has actually got baked into it, the behavior of the price. So on the daily basis, so obviously some of this will occur from the shorter time frame, which we're not measuring at this point, but because our realized cap is essentially, it's like a, how would you consider it? It's a baseline, so we're measuring the gradient of this market price to the baseline of the realized cap. So rather than just taking it as what is the gradient of the market cap versus zero, when the realized cap is steeping upwards, that means that any pullback is going to be counter trend to the realized cap. And that's why you're going to get these significant pullbacks. And that's why I actually believe that this is far more reflexive, because the orientation of the capital inflows is actually what your baseline is, what this is measuring. So, it should be able to provide you with a whole lot stronger signal than just looking at, the standard gradient. What this is telling us is that there is momentum to the downside, but once we get a technical correction back to the upside, it's probably a good sign that this correction is coming over. So I will certainly be looking at this particular metric to try and time this correction and this return back to the upside, because I think it's going to be very, very promising to keep an eye on. If we also look at, so the 142-day, what we've previously seen in bulls, that we basically break above, we get these kind of chops up and above, you get a few resets, but in general, in the previous bull market where we have more capital inflow, so back here is obviously very, very cheap coins, you're going to get a lot more reflexivity up and down. This is probably more indicative of what we can expect, and you can see we had this chopping around on the 142-day. We're up at similar levels. Let's put our spike lines on. We're up at similar levels to where we were back on this first peak. This first major correction, here. And in terms of all of our trending oscillators, you look at the channels with the Mayer multiple and MVRV and all these things, we are more or less at this first major correction point. Obviously this had a bit of time. What was this? 11th of June to 16th of July. So we're talking about a month of sideways before the bottom was in, and then we rally north. So, we're at a similar level. Maybe we get a correction down to here at, I don't know, a value of maybe 4.5 or something like this. Maybe we get support up on these previous levels, 5.6, 4.8, something in that realm. So we may still have a little bit of a correction to go. But ultimately, I think what we've seen is that there is the buy support there. It's a buy support that we haven't seen in previous market cycles. So I also would not be surprised if this gets caught a little bit short and then keeps rallying. So in terms of a support level, considering we're talking about capital inflows, I would be tempted to actually look at the realized price and our MVRV bands as probably a better signal for buy support than the Mayer multiple. So the Mayer multiple is obviously just based on our, let's just start with that just to get a bit of a view. Mayer multiple, here we are. So you can see that where we are at the moment, in my view, we've broken up into this purple channel. Historically, the purple channel provided some support. right, until we finally launch into the double blue channel and blow off top. So we've clearly broken out from this between pink and purple band, right? This was our phase through here, and I would actually count all of this as being, with the correction to the upside and the downside, right? These are two extremities of plus token and COVID. If you were to balance those out and take a nice little average, we probably would have traded somewhere between these two. You can see we've bounced up into the blue zone, and now we're pulling back to the purple. So the purple zone is giving us a 26,000 price floor, which I think most people wouldn't be too surprised by. I'm not. I would not be surprised if we get down to the mid-20s just to really, really reset. I would suspect it would be on more of a wick type basis rather than a sustained sit down there and trade for a long time, considering everything else we've seen. And if we look at our realized price, so because the capital inflows right now that we looked at with whale map are so significant, this is really something that I would be paying more attention to and putting a little bit more credence to, because there's the on-chain fundamental side of it. Previously, we had a bit of shake and bake around in this orange zone, dipping into the red and then dipping back below. So this is probably the zone that I'd be looking at. You can see we're coming back down to the orange zone. Maybe the MVRV resets down to like 2.3 or something similar to that. And that would bring us into a level at the bottom of this orange channel. That would correspond with, let's zoom in here like this and down. If we were to come and retest this orange zone, right, the caution level, that's going to be this purple point here, and that's 28,000. So, 28,000, and I believe that we actually retested 29 very briefly. Maybe an undercut of that 29 level, maybe down into the 27s, because we had 26 on our main multiple. We've got 28 with our MVRV, take a nice little difference at 27. Maybe a dip down to 27 would be the generational buy opportunity in this first major dip, and that would probably also span out about a month, which is what we've seen in the previous cycle. So it kind of lines up on a few different fronts. We get a month of correction. It resets a number of these metrics. We clearly have the buy support from the big players. And, bringing it down to this 28,000, 27,000 zone would, in my view, be a nice little reset and get things ready for the next run. And really it would align, right? You jump into this blue zone, pull back slightly under the purple, get you that nice little undercut to scare everyone, and then back into that channel and rinse, repeat, right? Rinse, repeat a few times until we finally hit the moon mission. So that was a bit of an overview of what I think is probably the biggest trend going on at the moment, which is the whales coming into the space. And we're talking about US dollar whales who are trying to get position, get exposure to this asset class. It is clear that they are accumulating in size, and it seems to be that the FUD is not really shaking them out because there's a fairly substantial amount of volume being played into this whole thing. Overall, it's pretty bullish in my view. I would like to see that a bit of time and a bit of an undercut of that level just to shake out all the weak hands and test everybody's resolve. Right, we had that first sell-off down to 29, and people start saying, "Hey, bear market is over." But we all know that markets like to test people, and I wouldn't mind a bit of a pullback down for another leg. But overall, if we were to rally from this point in time, I also wouldn't be super surprised because of just the sheer volume of money that's flowing in. So hopefully that was a good update. Let me know if you've got any comments or thoughts in the chat room, and I'll catch you in the next one. Cheers.